All right, let's dive in. Today, we're looking at Navin Fluorine International Limited.
FIL.
NFIL, right?
Yeah.
You know, for all those fluorochemical fans out there.
Yep.
They just dropped their Q2 and first half results for fiscal year 2025.
Fresh off the press.
So we've got the investor presentation and the stock exchange filing right here.
Two juicy sources.
We're going to really get into the details here.
Absolutely.
Now, NFIL, you know, if you're not familiar, they are kind of a big deal in the specialty fluorochemicals space.
Yeah, you could say that.
They're working with some pretty big names in pharma, agriculture, a whole bunch of industries.
Across the board.
And, you know, they've been on this growth trajectory, really investing heavily in new products, locking down those long-term partnerships.
It's been impressive.
So what we want to figure out today is how are those moves actually paying off?
Yeah.
Especially, you know, given all this kind of craziness that's going on in the market.
Right. It's a turbulent time.
Yeah, exactly.
And I think what makes NFIL so interesting is that they're not just any fluorochemical company. They're aiming for the top spot and doing it in a very calculated way.
Oh, really?
Yeah. For instance, they're claimed to be India's first HFO producer.
I did see that.
It's not just a marketing gimmick. They've really put their money where their mouth is with research and development, culminating in, you know, their dedicated Navin Research Innovation Center in Surat.
Wow.
And let's not forget, the acquisition of Manchester Organics supercharged their R&D capabilities, especially in the CDMO space, which, as we know, is just booming.
Yeah, no, that's a really smart move.
Concrete steps, not just talk.
Okay, so they're playing chess, not checkers.
Yeah, they're thinking several moves ahead.
All right, so let's get down to it. How did they actually perform?
Well,
The consolidated revenue for Q2 FY25 came in at 518.6 crores.
not bad.
That's a 10% jump year over year.
Yeah.
Pretty good, right?
Yeah, on the surface it looks great. But remember, one quarter doesn't tell the whole story. If we zoom out to the first half of the fiscal year, we see consolidated revenue growth still sitting pretty at 8% year over year.
Okay, still good.
Still good. However, and this is where things get interesting, their operating EBITDA actually decreased by 2% for H1.
Okay, so for folks listening who maybe aren't like, you know, financial wizards, what is EBITDA?
Yeah, good point. EBITDA is essentially a company's profit from its core operations.
Okay.
It strips away things like interest and taxes, so you get a clearer picture of how well the business itself is doing.
Okay.
And in this case, the decrease translates to a 215 basis point dip in EBITDA margin,
Wow.
which means their profitability is taking a hit even with that revenue growth.
Okay, so it's kind of a mixed bag then. Strong top-line growth, but some concerns about profitability.
Exactly.
And I think this leads us nicely into the next level of analysis, which is, you know, breaking down NFIL's performance by their individual business segments.
Sound good.
So first up, let's tackle their high-performance products segment, or HPP. Yeah, this is where, you know, those refrigerants are hanging out.
The cool stuff.
The cool stuff.
Literally, right.
Keeping things cold.
And it seems like they're riding a bit of a wave there.
Yeah.
The Q2 revenue for HPP surged 23% year over year.
Big jump.
Huge. And they specifically call out, you know, the higher sales of R32.
Which they're very proud of.
Which they should be. They're India's first producer of that.
Yeah, it's a big achievement. And combined with their investment in expanding that R32 capacity, it shows they're serious about capturing that growing market for climate-friendly refrigerants.
Oh, absolutely. They're not stopping there either.
No, they're not.
They've got some major capacity expansion projects in the pipeline for HPP.
Yeah, they're really going for it.
They highlight a new AHF project
Yeah.
and that additional R32 capacity we talked about,
Mm-hmm.
both set to come online in FY25 and early FY26.
Yep.
They even use the phrase constructive outlook for R32 offtake.
That's very optimistic.
Yeah, it sounds like they're putting a lot of faith in that continued demand. They're betting big.
Yeah, big time.
These aren't random projects. They're very strategic moves in line with their goal of becoming a leader in this space.
It's like they're saying, we believe in this market.
Yeah,
We're all in.
absolutely. They're putting their money where their mouth is.
Yeah.
But let's not get ahead of ourselves.
Right.
Not all sunshine and roses.
Oh, you mean like their specialty chemicals segment?
Yeah,
That one kind of took a tumble.
it did.
15% year-over-year revenue decline in Q2.
Ouch.
They blame global industry slowdowns.
Yeah,
And no surprise here, fierce competition.
of course.
But even with that dip, they don't seem too worried.
They're a resilient bunch.
They're talking about strong order visibility for the second half of FY25 and beyond.
Yeah, they're optimistic.
That sounds pretty optimistic given all the headwinds.
It does. What's fueling that confidence?
Yeah, what is it?
Well, a couple things. First, Their new production facilities at Dahej and Surat,
Oh, right.
those are expected to boost output and efficiency.
Okay, that makes sense.
Second, they're not just sitting back while competitors are trying to take over. They've launched a brand new molecule at Surat,
Oh, wow.
with 2 more coming next quarter.
That's impressive.
They're actively innovating to stay ahead of the curve.
So even with that dip, they're not giving up.
No, they're doubling down on production and innovation to turn things around.
Makes sense. All right, let's move on to what seems to be the star of the show here.
The main event,
The main event, yeah.
the real breadwinner,
Their Contract Development and Manufacturing Organization segment,
CDMO,
or CDMO, yeah.
the one everyone's talking about,
This is where NFIL really seems to be, showing off a bit.
flexing their muscles.
Yeah, they delivered a 41% year-over-year revenue jump in Q2.
Wow, that's impressive.
It is. What's driving all that phenomenal growth?
I think this is where their partnership strategy is really paying off.
Okay.
They've got some impressive wins that they're not shy about sharing.
Oh, yeah, they're talking about it.
They're supplying a major European player for process qualification. They've landed a scale-up order from a big U.S. company.
Wow.
And they've got ongoing orders for late-stage intermediates.
That's amazing.
This isn't just talk. It's concrete evidence that their strategy is gaining serious traction.
Yeah, for sure. And they're not just relying on, existing capacity.
Nope. They're building for the future.
That new CGMP4 facility, that's a massive investment.
Huge.
Yeah.
Designed to support their European CDMO partnership.
And they're already talking about a strong order book for the second half of FY25.
Yeah, they've got clients lined up and ready to go.
They've built up some serious momentum.
They have. Their CDMO segment is firing on all cylinders, fueled by those strategic partnerships.
Right.
And their willingness to invest in the infrastructure they need to support their goals.
So we've got this kind of mixed bag, stellar growth in HPP and CDMO, but that stumble in specialty chemicals.
Right.
How does all of this actually, shake out in terms of their overall financial health?
Yeah, that's the big question. We can't just focus on revenue.
Right.
Profitability matters too.
So looking at their consolidated profit after tax for Q2 FY25, we see a 3% dip year over year.
Yeah, not great.
And it's not just a one-time thing. This is a continuation of a trend we saw in the first half of FY25,
Right.
where their profit after tax decreased by 10%.
So this is where things get interesting. You've got this revenue growth, but then a dip in profitability. To understand this better, we need to look at their cash flow statement.
Okay, so cash flow is king, as they say. What does the statement tell us?
Well, the first 6 months of FY25 showed a healthy net cash inflow from operating activities,
Okay,
meaning their core business is generating cash.
that's good.
However, there was a significant cash outflow in investing activities.
Okay, well, they are pouring money into those CapEx programs we talked about. Building those new facilities, expanding capacity.
Yeah, investing in R&D.
It's like they're laying the groundwork for future growth.
They are. But it's important to remember that these investments need to translate into higher profits eventually.
Yeah.
So the big question is, can NFIL successfully navigate this period of heavy investment and come out on top?
Right. Can they emerge as an even stronger player in the fluorochemicals market? That's what we'll explore in the next part of our deep dive. Okay, so we've covered, revenue growth, profitability concerns,
Right.
those ambitious expansion plans that they have,
Yeah.
that stellar performance from their CDMO segment.
It's a lot to unpack.
It is. But it sounds like we're still kind of waiting to see if NFIL can really, turn all these investments into the kind of financial performance that investors are looking for.
Yeah, it's a wait-and-see game.
What I'm curious about is, we've talked about all these strategic moves.
Right.
What's the bigger picture here? What's their end goal?
You've hit on a crucial point. They're not just reacting to market trends. They're actively shaping their own destiny.
Okay.
Their journey has been marked by consistent expansion, evolving from a primarily domestic player to a company with a global footprint serving a diverse range of sectors. And they're not afraid to take bold steps. That claim of being India's first HFO producer,
Yeah.
it's a declaration of their ambition to lead the charge in a critical market.
So it's not just about participating, it's about being a pioneer.
Exactly. They want to set the pace for the entire industry.
How do they actually do that, though? I mean, it's a pretty competitive landscape.
Well, their commitment to research and development is key.
Okay.
They're not just relying on existing technology. They're actively pushing the boundaries of what's possible in the fluorochemical space.
Interesting.
Their dedicated R&D center, the Navin Research Innovation Center at Surat,
Right.
That's a testament to this commitment.
Hmm.
And remember, their acquisition of Manchester Organics,
Mm.
that wasn't just about acquiring capacity. It was about bringing in world-class expertise to boost their innovation engine.
So they're not just innovating for the sake of it.
No, they're laser-focused on strategic areas that align with market demands and their growth goals.
Makes sense. They're also really emphasizing backward integration
Yes, very important.
to secure their supply chain,
Oh.
especially for those critical raw materials like fluorspar.
It gives them more control over their production process
Right.
and helps mitigate those risks associated with global supply chain disruptions.
Which is something we've all become very familiar with in
Unfortunately.
recent years. And it's not just about securing those materials, it's about diversifying their sourcing. They're
Right.
strategically shifting away from relying solely on China, reducing their dependence on a single source and, mitigating those potential geopolitical risks.
It's a smart move.
I'm also really struck by their emphasis on ESG principles.
Yeah.
It seems like it's really ingrained in their business philosophy.
It's not just a box to tick. It's a core part of who they are.
They've set these ambitious sustainability targets, and they're very transparent about their progress.
Which is refreshing to see.
It is.
They're not just paying lip service to sustainability. They're taking concrete actions to reduce their environmental impact.
Give me an example.
Well, they've implemented a comprehensive water recycling program
Oh, wow.
that has significantly reduced their water usage.
That's great.
They're also committed to transitioning to renewable energy sources
Okay.
with specific targets and timelines.
So it's not just vague promises.
No, they're putting in the work.
And it's not just the environmental side either. They're prioritizing those social and governance aspects as well.
Absolutely.
They talk about their diverse board, their robust risk management framework, their commitment to ethical conduct.
Right.
It's about building trust with everyone.
Investors, customers, employees,
Yeah.
the whole community.
Their focus on governance is really noteworthy.
Yeah, especially in an industry that faces potential environmental and safety concerns.
Yeah.
They have a very clear process for identifying and managing those risks.
Okay.
And they're committed to maintaining high ethical standards in all their operations.
So it's this holistic approach to ESG that really sets them apart.
I think so.
It seems like they're playing the long game here, building a legacy, not just chasing those quick profits.
And investors seem to appreciate that.
Yeah, that big interim dividend,
Ah.
the grant of stock options to the managing director.
It sends a strong signal of confidence.
But let's not get too carried away here.
Right.
They're still operating in a very volatile global market.
That's true.
Things are changing all the time, and the competition in the fluorochemical sector is intense.
It's a tough business.
So while they've laid a strong foundation, there's still a lot of challenges.
External factors like inflation and slowing economic growth,
Yeah.
those could impact demand regardless of how well prepared they are internally.
So even with the best plans, external forces can really mess things up.
It's the nature of the beast.
So with all these initiatives and challenges in mind,
Yeah,
can they convert all their efforts into that sustained profitability?
that's the big question.
Will those capital-intensive projects actually deliver?
It remains to be seen.
Can they navigate those external challenges
Right.
and really emerge as a leader in the global market?
To answer that, we need to look even deeper
Yeah.
into the specifics of their financial performance
Okay.
and analyze their strategic positioning within the industry.
All right, well, hold on to your hats, folks, because in the final part of our deep dive, we're going to do just that.
We're going to tackle those tough questions.
We'll look at those key financial metrics, assess the potential risks and opportunities,
The good and the bad.
and ultimately try to figure out if NFIL is really on track for long-term success. Okay, so it's the final round of our Navin Fluorine deep dive. We've gone through their growth strategy, their impressive ESG commitments, all those big capital expenditure programs that they're taking on.
Right, a lot going on.
Now, the question for any potential investor is, are they actually going to be able to turn all of this into, real financial performance?
Yeah, the kind that makes investors happy.
The kind that makes portfolios sing.
Exactly.
Right.
That's the key question.
Yeah.
And to answer it, we need to consider a few things.
Okay, like,
Well, first timing. NFIL has a lot of irons in the fire right now, with several major capital projects scheduled to come online soon.
yeah.
This means there's a lag between when they spend the money and when those investments start generating revenue.
So it's a bit of a waiting game.
It is. They're planting the seeds now, but it takes time for them to grow.
So what are some of the challenges that they might face in actually capitalizing on these investments, even if everything goes according to plan?
Well, the global economic landscape is still uncertain. Inflation is a concern, and we're seeing some signs of slowing growth in major markets.
Right.
This could potentially impact demand for NFIL's products, even if they have the capacity to produce them.
So even with the best laid plans, there are those external factors that they can't really control.
Exactly. Those are always a risk. What about internal challenges, though?
Oh yeah. What are some things that NFL needs to get right to make sure that, these investments actually pay off?
Well, competition is always a factor in a dynamic industry like this. They're a major player, but they're not the only one. They need to continuously innovate and differentiate themselves to stay ahead, especially as new players enter the market.
They can't just sit back and relax.
No, they have to keep pushing the envelope.
So what else should investors be watching for?
Execution.
Hmm.
They need to deliver on those complex CapEx programs effectively.
Right.
Delays or cost overruns can eat into profitability. So strong project management and operational efficiency are absolutely crucial. They need to bring those new facilities online smoothly and ramp up production without any major hiccups.
It sounds like a lot to juggle.
It is managing timing external factors, internal execution.
And of course, they need to address that profitability puzzle. They've shown strong revenue growth, but those EBITDA margins have been under pressure. How do they fix that, especially with all these big investments they're making?
It's going to take a multi-pronged approach. They need to keep costs under control, improve operational efficiencies, and maybe even explore some strategic pricing adjustments. They might also consider focusing on higher margin products or services within their portfolio.
It's a lot to handle.
It is.
Huh.
But, as we've gone through this deep dive, I get the sense that NFIL is a company that's not afraid of a challenge.
Yeah, they seem pretty ambitious.
They are. They're strategic, and they seem to have a good understanding of the risks and opportunities out there.
Yeah.
Their commitment to innovation, their strategic expansion into new markets, and their focus on building strong partnerships all suggest that they're proactive and forward-thinking.
And that commitment to ESG principles, that's a big plus.
Yeah, definitely. It sets them apart and attracts investors who are looking beyond just financial returns.
So for our listeners out there who might be thinking about NFIL as an investment opportunity,
Yeah.
what are your key takeaways? What should they be thinking about after all this information?
Well, NFIL is a company with a compelling story, a lot of potential, but also some inherent risks. Their commitment to innovation, strategic expansion, and ESG principles are all good signs. However, the global economic uncertainty, competitive pressures, and the execution risks associated with those large-scale CapEx programs all need to be carefully considered.
So it's not a slam dunk.
No investment is. The coming quarters will be crucial in determining whether NFIL can really convert those investments into tangible results, both in terms of revenue growth and margin expansion.
So keep a close eye on those upcoming earnings reports.
Yeah, and pay attention to how they're managing those CapEx programs and navigating the global economic headwinds.
It's all about assessing those risks, weighing the potential rewards, and making informed decisions.
Exactly. Investing always involves a degree of uncertainty.
Well, I think we've covered a lot of ground today. From financial performance to strategic initiatives to sustainability commitments, we've really examined NFIL's story, highlighting their successes, their challenges, and the factors that will likely shape their future.
Hopefully we've given you, our listener, the insights you need to form your own conclusions about this dynamic and ambitious company.
So as you continue to explore the world of specialty fluorochemicals and evaluate investment opportunities, remember, knowledge is power. Stay curious, stay informed, and always keep diving deep.